Hey guys, welcome back. You're still tuned into Power Breakfast. Now, the Finance Ministry has told a parliamentary panel that India will now aim to become a $5 trillion economy by 2027. Now, the timeline for becoming a $5 trillion economy has been postponed by 2 years to 2027. This is because of the pandemic. However, inflation is expected to enter the 2 to 6% band by the fourth quarter. So, Parikshit is standing by the big wall to tell us more about this. Parikshit?
Top government officials have briefed the panel on India's roadmap for a $5 trillion economy and the problems that are there in the global economy right now. Sources say the government has said that the real GDP growth is expected to be between 6.5% to 7% in FY23, inflation to enter tolerance band of 2 to 6% by Q4 of FY23. Urban unemployment rate, which is at 7.6%, to fall further by end of fiscal, and private capex cycle could commence in FY24. Among the headwinds to India's growth path, pressure on currencies to depreciate against the dollar will persist into 2023. Loss of world output and trade could impact India's growth. Continued high crude prices will dilute domestic stimulus to growth, and food inflation could worsen due to climatic conditions. Now, the timeline for India becoming a $5 trillion economy has to be postponed because India has lost 2 years of growth because of the pandemic. The $5 trillion target can be achieved by 2026-27. For this, 6.5% annual growth rate would be needed, and inflation should be below 6% and US inflation closer to 3%. There are key reforms needed to cross $5 trillion target by 26-27. This is what the parliamentary panel has been told by government officials. Now, among the reforms, on the agriculture side, we would need land consolidation, facilitating crop diversification away from food grains into edible oils. On the power side, increasing user charges, improving DISCOM viability and reliability of affordable power for MSMEs. Improve capacity of state governments to undertake local infrastructure spending. Reduce compliance burden on MSME from state, local and union governments, greater focus on asset monetization and privatization, reduction of government debt stock and lower cost of capital. These are the recommendations of the Finance Ministry and NITI Aayog for the reforms that would be needed in order to cross the $5 trillion target by 26-27.
All right, Parikshit, thanks a lot for taking us through what the